All right, we'll get started. Hello, everyone. My name is Bo Eckstein. Welcome. You guys obviously saw our event and we're interested in how to buy your first business with utilizing SBA financing. So we're going to dive into that and more today. So thanks for attending. I'm really excited to present today. I have a mission to help 100,000 aspiring entrepreneurs become successful business owners over the next 10 years, whether that's through my podcast or events like this. And we definitely do. We do events all the time, and it's really fun for me to help people that want to transition out of W-2 world into business ownership. So that's why I love doing this kind of stuff. All right. So about myself, actually 27 years in lending and about 8, 9 years in SBA financing. I've done a lot of real estate financing. I also own a company called Business Ownership Coach, and we help people find and fund their ideal business. I was just awarded Coleman SBA Loan Broker of the Year. That's a pretty big award to get in the industry. I partner with different banks, credit unions, and non-bank SBA lenders. A little bit about me: I've invested in real estate, owned businesses myself, and then obviously help people get SBA financing and find businesses to buy and invest in. Today, we're going to talk all about the different loan products, SBA 7A, 504 loans, different government guaranteed financing, how they work, how the deals get structured, and much more. So starting a little bit about SBA. SBA is a government guaranteed program. So SBA doesn't make the loans. They guarantee a portion of the loan depending on the loan size. So in fiscal year 2024, there was over $56 billion funded through the SBA loan programs. The 7A, which is the most popular product and the one we're going to kind of spend the most time on today, we did over 31 billion in loan volume this past fiscal year. And what's interesting is the SBA put pressure on banks to do smaller loans. For example, loans up to 150,000 saw a 33% increase. Loans up to 500,000 from 150 to 500,000 saw a 16% increase. And overall, volume's up by 7% for fiscal year 2024. So we're going to continue to see those trends, in my opinion. Right now, you're capped at being able to have an aggregate amount of $5 million of total SBA financing. And that hasn't changed since 2010. I believe that will change in the next 12 to 24 months. And I'm hoping that we get it moved up to 10 million, which will be a huge, huge boom for our economy. So key highlights: you can do loan amounts up to 5 million. Use of funds could be for business acquisition, real estate, equipment, working capital. Loan terms for real estate can be as spread out, amortized over 25 years. Without real estate, it's going to be a 10-year term. Generally, these loans are tied to the prime rate, which is the Wall Street Journal prime, plus the lender spread, which we call margin. And the margin can generally be up to 3% for normal size SBA 7A loans. For smaller loans, they can be as high as 6.5% for those SBA Express or smaller loans. So on a business acquisition, well, this is talking about franchise financing, but let me just rewind a little bit. On a business acquisition, we could do up to 90% financing. So let's say you found a business to buy for $1 million. You could potentially, if the cash flow from that business supports the debt of the new SBA loan, we could finance $900,000 with the bank. You would come in with the 10%. That 10% can be brought in by another investor partner that owns less than 20%, and that person wouldn't need to be a guarantor. So you can actually get into businesses with zero out of pocket. Now, you still have to have good credit and all the other characteristics to be able to get the loan. But the point is, you can be extremely creative with these loan programs. That's why I love it. For franchises, we can do franchise startup deals up to 150,000 loan amounts. We can finance potentially up to 90% of all the startup costs. I helped a gentleman. He worked in gutter sales, so he would come out and he worked for a company. He would go out and bid the job to re-gutter houses. And he's like, look, I want to own a business. And so he found a painting company, a franchise startup, and the total investment startup costs were 120 grand. We were able to get him into that franchise for 12,000 out of pocket. So we can help people that are just getting started with a little bit of money all the way up to people that are growing big empires and using the 504 SBA loan to buy $15 or $20 million real estate deals that they're operating a business out of. You have to be operating a business. It's not for investment. So you can't buy multifamily property and things like that with this type of financing. It's for operating businesses. But with the franchise financing, on the bigger deals, usually we're funding about 80% of the total startup costs. And we have some banks that will give you interest only for the first 9 months. They'll also give you additional revolving line of credit. So there's lots of cool dynamics. So to be a good borrower, what makes you eligible for SBA financing? Generally, a 680 or better credit score. Generally, you're not charged up on your credit cards. You have 30% or less utilization. Generally, you have outside income that supports outside debt. So if you have those characteristics, getting SBA financing is in the realm. You have to either be a U.S. citizen or a permanent resident. Okay, that's the SBA guidelines. Now, I do have other products we're going to get into that if you're not a U.S. citizen but you live here in the States, there are products out there that could be available depending on the state you reside in. So we do this a lot too. This is called expansion or rent replacement. Somebody owns a CPA practice. They've been paying rent for 10 years. They're doing quite well. We can actually get 100% financing to go buy a building. As long as they occupy 51% of the space, we can do 100% expansion financing. Or perhaps you own an HVAC company and you've been running it for a while and your competitor is retiring and wants to sell their HVAC business. If it's the same NAICS code, which is North American Classification System, you can do 100% expansion financing. And so that's what these people are doing. They're starting to roll up and buying more of the same type of business. That's how they're growing quicker. And they're utilizing 100% financing, potentially utilizing the SBA 7A program. Besides the SBA 7A program, there's an SBA 504. The SBA 504 can do, it does assets. So it's basically real estate, commercial real estate. It's 2 loans. It's a first and a second loan. It can do equipment as well. It could be amortized between 10 to 20 years, but primarily for commercial real estate, we're doing 25-year amortization. It's a first and second loan. The loan structure is like this. Generally, a bank makes the loan. So if I'm just going to use $1 million deal, it'd be a $500,000 first lien, and the second lien is actually the government guaranteed piece of $400,000. So you're getting 90% financing potentially. There's variables on this. The second is a fixed rate. It's fixed for 25 years. And currently today it's around 6.25. The first loan we negotiate at bank level. That's usually tied to Wall Street Journal Prime plus margin. The downside of it is it has a longer prepayment penalty, but it does have typically a better blended rate than the 7A. 7A is a Swiss Army knife. I can do non-real estate deals with no collateral, or I could do real estate deals. So sometimes we evaluate, does it make sense to do it as a 504 or 7A? But generally today we're going to focus more on the 7A. You can also refinance. So some people have existing SBA loans. You can actually refinance as long as you get a 10% reduction in payment. We can potentially refinance and get a better margin. SBA loans are tied to Wall Street Journal Prime plus margin. Margins can be on a normal size SBA loan up to 3%. So sometimes we're able to take somebody and refinance their loan and get a better margin, extend the term back out to 10 years. So we reduce debt payment that way and get a better rate, and potentially even roll in other business debts to, essentially reduce overall debt payment is the goal of a refi. And we can refi 7A loans into 7As. Sometimes you can refinance 504 loans as well. So there's some creativity that you can do if you have a higher rate to reduce debt payments overall. So business lending trends, 7A demand's up 13% year over year as far as fiscal year 2024. SBA loan volume for the 504 is actually down. And I think it's down because our rate environment has been up and now rates are coming down. So the 504 will actually probably start picking back up. And the 7A, more banks and more SBA lenders want to do 7A loans because the reason why, they make more money and it's an easier process. On a 504 deal, we can do deals as big as $20 million. The guaranteed piece is capped at $5 million. And you can only have an aggregate amount of $5 million of SBA 7A. But hypothetically, you bought a business for $5 million with SBA 7A. You have no more aggregate, But now you want to buy a building. Well, you can use a product called the SBA 504 Green. And it doesn't matter about that $5 million aggregate if you use the green program, because the green program, basically what it is you're buying a building and you're doing something that increases the efficiency, energy efficiency of the building. We get a third-party engineer to tell us what the low-hanging fruit that let's put in LED lighting. We reduce energy consumption by 10%. We're now eligible. We can essentially do, before you could have a total of 16.5 million of total aggregate if you did the 504 green. And on some cases now it's unlimited, but you're capped at 5.5 million per deal for the second piece of the 504. That's a little bit over your head, I know, but I'm just trying to give you a little bit of the way you can really scale your business. So let's just look at a use case of this. We'll talk about the guy that I helped get into the painting, get his loan for the painting company. He's now crushing it in his business, and his next step is he can go buy another painting company and do a roll up, or he can buy more territories of the franchise, or perhaps he says, look, I want to buy a building because I want to create more wealth. We go out, assuming his cash flow supports it, we go out and we go get a building. As long as he occupies 51%, then we can get 100% financing, assuming everything factors out. And then that other space, if he's not occupying the other 49%, potentially could be leased out. And wouldn't it be cool if that lease space covered your debt payment, right? That's how we start really kind of growing our wealth. So, like, I don't know if you guys have heard about house hacking. I call this business hacking. If you guys want a business hack, SBA, in my opinion, and I've had a real estate background, I do real estate lending too. SBA, in my opinion, is the way to really leverage with good debt, as long as you're a good business owner and operator, to get wealthy, right? Because when you're getting started, let's face it, it's all about utilizing other people's money to buy cash flowing assets or potentially cash flowing assets. And now we roll that in with a real estate strategy. And when you own a business, if you're coming from corporate as a W-2 employee, you pretty much have no tax write-offs, really, right? And so part of the whole strategy is, how do you pay less in taxes legally? And that's by owning small businesses. The tax code wasn't written for W-2 employees. It's written for small business owners. We talk about Section 179. You could depreciate assets and potentially offset some of your earned income. I'm not a CPA or whatever, but go talk to a CPA and learn about Section 179. Because it's not how much money you make, it's how much you keep in your pocket. And there's no better way than owning businesses, in my opinion. So when you're doing a 504, you have to work with the CDC. So what happens is, you set up a call with me if you want to work with me. We assess the deal. We look at different options. If it's going to be a 504 loan, we figure out the bank first, and then we figure out the CDC. The CDC is a nonprofit organization that works in conjunction with SBA. They package up the loan and send it to SBA for underwriting, because the 504 has two underwriting processes: bank level and CDC level or SBA level. Versus the 7A, we only have one underwriting process at the bank. They don't have to send it to SBA if they're a preferred lender for the SBA loan program. That's generally who we work with. So top SBA loan volume by industry, fiscal year 2024, full service restaurants number 1, limited service restaurants number 2, residential remodelers 3, plumbing, heating 4, fitness, recreational, and so on. So those are the top by loan volume. SBA can finance most any type of business, as long as it's not a money lending business or like a cannabis business. As long as it's eligible in that way, there's lots of uses for SBA financing. So it really is a wonderful tool. And a lot of people say, well, what if the business doesn't have collateral? It doesn't need to have collateral. With the 7A loan, as long as the loan is under $500,000, we don't look for additional collateral. If the loan amount was over $500,000, the SBA guidelines say we have to look for additional collateral. So if you owned a primary residence or rental property and there was a collateral shortfall, and if there will be a collateral shortfall, unless there's real estate involved, then they would have to put a lien on that property to make up for that collateral shortfall. But what if you say, well, Bo, I don't own any real estate? Well, that's fine. They still can do the loan. You almost get penalized if you own real estate and you do a loan over 500,000. So what some people do is, they lever up their real estate and put HELOCs on it and so forth. I'm not advising that, but that's what I see sometimes. Partial buyouts. You couldn't do this before, but about a year and a half ago, you can now do partial buyouts. So a seller's getting old, but they love the business. They maybe you work for the company and you strike up a deal. The business owner could stay on. Maybe they own less than 20%, so they don't have to guarantee the loan. You come in and buy 81% of the business. They leave some of their equity in the deal. And then you come in with your equity injection needed, or perhaps you get the seller to carry a little bit of it too. So partial buyouts are now eligible. So this is a tool we're seeing utilized a lot right now. Seller carryback. So let's go back to the story of somebody buying a HVAC business for $1 million, $900,000 SBA loan. You got to come in with 100 grand, 10% of total cost. So what's really cool about SBA is and buying businesses, essentially, sellers are used to carrying paper. In real estate, they're not used to, when you ask for a seller finance deal, it's not as common. But in business, it's common. So the seller, you write an offer or an LOI for $1 million, and you ask for the seller in that LOI, that letter of interest, letter of intent, you ask for the seller to carry back a portion of that $100,000. It's called on standby, on full standby. So assuming that they're willing to do that, that means that there's no payments due for the first 2 years, or they're interest only, depending on the deal. You can usually get in, not all banks will do this, but some banks will, with as little as 2.5% of your own funds. So on a $1 million deal, $900,000 bank loan, $75,000 on standby from the seller, you come in with $25,000 to close. And potentially you could just bring an investor in and give them a portion of the equity of the business under 20%, and they could bring the 25 grand in. Now, I'm going back to the point that you have to be a good borrower, and it has to be a reasonable case why you're able to do that. Like if you don't have established credit and you don't really have a great resume, that's gonna be a little bit harder to do. But I'm just giving you some ideas on the great flexibility of this program. There's also other programs, like there's state guarantee programs. I'm mentioning California here. So a program like this would be utilized if it doesn't quite fit in for SBA. Perhaps it's a nonprofit. So you have to be for profit for SBA financing. So if it's a nonprofit, sometimes we find other state guarantee programs that fit better, or perhaps the borrower is not a U.S. citizen or a permanent resident, or perhaps it just doesn't fit for one reason and it would fit under a state guarantee program, or perhaps we're doing a bigger loan. Then we would utilize something like the state guarantee programs for states that have these state guarantee programs. So essentially, there's a lot of things you can do with SBA. There's businesses to buy. There's franchises. What we see a lot in what we do is look, there's a lot of people want to buy businesses, right? And they go out and they go on to like biz buy sell, and finding a good business to buy is actually pretty challenging, because there's a lot of searchers doing that right now. And if you're coming from corporate, you might not have a lot of experience running businesses, so it's a little bit overwhelming. So that's why I think sometimes franchises are a good option. And franchises are not just Subways. Everybody thinks of Chick-fil-A and Subway, but we actually have about 3,000 franchises in the US. And a lot of the business models that we help people get into are service-based businesses. There was just an article in the Wall Street Journal Times. It talked about the new wave of millionaires, which are people that own HVAC companies, plumbing companies, right? These boring businesses. So those are where the trends are. Why I like franchising, because usually you're not paying a multiple, you're not paying a premium. And we're working with people that are getting into like low startup cost businesses that are anywhere from, we have business models that start around all-in investment of 70,000 to 300,000 are the ranges of a lot of the home-based service models or B2B models. And we can finance 80 to 90% of the startup costs. And why I like franchising, because if you get into the right franchise, you're assigned a coach, they help you with the marketing, And you really are able to find a business that is a good fit for you. So like a lot of it is like, well, what type of business should I invest into? So what we do is we give you an assessment that actually uses a little bit of science to actually figure out what business models might be a good fit based on that. And in a discovery call is generally how we first assess what business models and then where you're located in your capital that you have. So generally, if you have a little bit of capital, so this is what I would say, like, are you ready? One is you have to have the desire to and be committed to wanting to buy a business, first of all, right? Like you have to be committed to the process and the second thing is you have to probably have good credit, like a 680. Third is preferably you have a job or your spouse has a job, so you have outside income that supports outside debt. Uh, if you have that and probably anywhere from on the low end 15-ish thousand to more than that, then there's probably something out there for you. Now, I the other day I was on a podcast and I created some steps about like how do you go from being able to quit the job, right? If that's your goal. And some people, let me just preface this by some people keep the job and invest into a semi-absentee business model, right? But you have to have the skills to do that. So I think utilizing SBA and finding your first business, whether it's something very simple like vending, which is on some of the programs we have, is SBA financeable. We're able to finance 90% of all the equipment of these businesses on the vending side. So that's a good what I call a gateway business because you can keep the job and you spend about 1 hour per week per machine. And then there's a lot more advanced businesses like you could own HVAC companies. One of the HVAC franchises we work with, the last 30 people that signed up, 27 of them were entrepreneurs or aspiring entrepreneurs, doctors, attorneys that were keeping their business, but liked the idea of owning an HVAC business because it's recession resilient. There's a lot of trucks that you buy and equipment, so you have good tax write-offs. And if you invest into a good franchise model, like you don't have to have trade experience because I was concerned about that in the beginning. Like I'm not handy at all. My hands are soft. And so, but I know like looking at all these business models, ones that don't require a build out, like we think of franchises, we think of a retail build out. And granted, we do have those too, but the home service type businesses, the B2B businesses, we even have businesses that are geared for like uh, more of a consultative business model. We have business models that do medical staffing, business models in the senior space. So that's why we really have to get a good understanding of the candidate first. What their time commitment is, what their schedule looks like. Are they married? Will their spouse participate? Do they have children, or do the children want to get into the business? We create almost a thesis of what type of business makes the most sense. Um, but I do believe being able to utilize this SBA financing and pairing it with getting a good business and then creating a plan to eventually get you out of the job if that's your goal. So going back to the podcast I just did, I broke down like the steps to take. The steps to take, like have 6 to 9 months of reserves, right, before you quit the job. That's kind of a given. As you're building, find a business that you can build alongside your job. And once you get to about 60 to 80% of income from that business, then with the reserves intact, then maybe that be a good time for you to step away and then scale the business that you invested in further. So we develop plans like that for you and do all that kind of stuff. We help you, we essentially want to see you succeed, right? We don't want you to get into a business just to own a business and you don't have the skill sets to run that particular business. So do people fail in business ownership all the time? The probability if you invest into a franchise is because of the support and the systems, you probably have a better chance of being successful. But you also have to develop skills yourself because like anything, nothing's easy. Everybody makes it sound really sexy and easy in the beginning, but you have to develop those skills. But I think I'm writing a book right now, and the premise of the book is why everyone should own a business because the combination of having the tax write-offs and creating legacy for your family, it just makes sense. If you really look and understand how money works, you'll say, okay, owning a business and then taking that extra cash flow and parking it into long-term appreciating assets like real estate and then top it off with getting all the good tax benefits. It's the way to go. Anyways, if you're looking to find and fund your ideal business, you can go to, we're going to put it in the Q&A or the chat right now. We'll try to send it out by tomorrow in an email, if not before that. But you can go to businessownershipcoach.com/quiz, take the quiz if you want to work with our team. And for the first 20 people, I'm going to that do that, I will invite them to a workshop I'm hosting, which is called Own a Proven Business, that replaces your salary without starting from scratch. So if you're somebody that has relatively good credit, a little bit of money, and has the desire to buy a business, then go ahead to take the assessment, be one of the first 20, then you'll get an invite to come to Own a Proven Business Model that replaces your salary without starting from scratch. And you can learn more about the process, because today was just kind of a high-level overview. That will be a little bit bigger deep dive. We do a lot of events, so you can find more of our events on Eventbrite, or you can use my name, boeckstein.com/events, and you can find our event page. We have a vending webinar coming up and a few others, so if that intrigues you. But if you're ready to take action, and I would say take the assessment, and then we'll send you an invite for the workshop, and then just come to the workshop and keep learning and go from there. That's kind of the best advice I have. Appreciate all you joining us. I hope to meet every single one of you. And just have a great evening wherever you're at.
Are you ready? It's time to get the tools, prompts, and guidance you need to scale your business. With my team of VAs, my calendar stays full with qualified appointments. Now I want to help you do the same. Hi, I'm Bo Eckstein, and I've put together an exclusive ebook that will help you supercharge your productivity, scale your operation, and close more deals using virtual assistants and AI. Here are the key points you'll discover: productivity boost, scalable systems, and how to close more deals. In this free ebook, you'll discover proven strategies I've used in my own business, strategies that have helped me go from doing it all myself to building a high-performing team that runs like a machine. Get your free copy now and unlock the secrets to growing your business faster than ever before. Please visit bizscalingplaybook.com.
Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.